Now, they serve as a means of communicating information about the profitability and the financial position of the business. If the credit side is more than debit side, then it is gross profit. If the debit side is more than credit side, then it is gross loss. So, cash purchase, where do we record? In the debit side. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today we are in the 4th unit, that is session 1 of the 4th unit of the subject Fundamentals of Business Accounting, and this is for first Sem B.B.A, and your 4th unit is all about final accounts of proprietary concern. It's nothing but the final accounts of sole trading concern. So, already you have learned this in your PUC, that is how to prepare final accounts of a sole trading concern. So, let us recall this. Let us quickly begin the session now. So, if you see the introduction, first we have to know what are the financial statement or final accounts that are prepared under sole proprietorship or sole trading concern. So, these are the financial statements. So, what are the financial statements we have to prepare? So, the first one is trading profit and loss account, or it is also called as statement of profit and loss. So, the first account that we are going to prepare is trading profit and loss account. Next, we have to prepare the balance sheet. So, it is not an account, it is a statement where we are going to prepare the balance sheet in order to know the financial position of the business. So, these are the two important financial statements which is prepared at the end of the financial year. Now, you might get a question why we have to prepare the financial statement. Of course, each and every one wants to know about the financial position of the business. So, whatever the activities that has taken place throughout the year, so there should be a proper account for that, so that at the end of the financial year, we can clearly know what is the financial position. So, in order to ascertain that financial position, so these are the financial statements we have to prepare. So, let us see individually what is this trading and profit and loss account and what is this balance sheet. But time being, you remember, so always the financial statements are prepared at the end of the financial year. So, what we call it as, it is a financial period where the transaction have taken place and those transactions are put together and we are going to prepare the financial statements. The main intention is to know the net profit or net loss of an organization and financial position of the business. Thereby, it will be communicated to the respective users. So, it may be internal users or external users. Now, they serve as a means of communicating information about the profitability and the financial position of the business. So, as I told you, the main objective of preparing these financial statements is to know the profitability of the business or net profit or net loss of an organization and financial position of the business. So, what is the total of assets and what is the total of liabilities? So, this is about the financial statements. Now, moving on to the first financial statement that is we are going to prepare is trading and profit and loss account. Now, what is this trading and profit and loss account? So, here trading and profit and loss account is a single account where half will be trading account and next half will be profit and loss account. So, it is together called as trading profit and loss account. So, it is prepared to determine the profit earned or loss incurred by the business during the accounting period. Now, what is this accounting period? The duration in which we have taken the transactions in order to ascertain the profitability of the business. So, that duration is called as accounting period. Suppose the accounting period may be 6 months or the financial statement can be prepared only for each and every quarter where 3 months will be there, or for a particular year, that is 1 year duration. So, normally we are going to prepare the financial statement for a 1 year. So, normally the accounting period will be 1 year where it starts from 1st April and ends on 31st March. Now, why it is prepared? Why this trading profit and loss account is prepared? In order to know the profit earned or loss incurred in that particular financial period. It is a summary of revenue and expenses. Now this trading and profit and loss account, it is a summary of revenue as well as expenses. So whatever the income which the business have earned and whatever the expenses it has been occurred, so or incurred. So those will be recorded in trading profit and loss account. So it is a summary of revenue and expenses of the business and calculates the profit or loss, that is revenue or income, are taken on the credit side and expenses are taken on the debit side. Now how we are going to prepare the trading profit and loss account? So your format will be like this. So here will be in your debit side, so it is expenses. So your debit side will be expenses and credit side will be income or revenue. So this will be the format of trading profit and loss account. So in the debit side it is expenses and in the credit side it is income or revenue. So it is a summary of revenue and expenses. So it is a summary of income as well as expenses of a particular business and calculate the profit or loss. So the main intention is to calculate the profit as well as loss in that particular financial year, where all the expenses will be recorded in the debit side and all the incomes will be recorded in the credit side of trading profit and loss account. If revenue, that is income, are more than expenses, suppose if the income is more than expenses, then it is called as gross profit or gross loss or net profit or net loss in the profit and loss account. So if the expenses are more than revenue or income, then it is a loss. So remember, if income or the credit side is more than debit side, then it is profit. If the debit side is more than credit side, then it is loss. So this is about trading profit and loss account. Now coming to just profit and loss account. So as I told you, so your trading profit and loss account will be one account. So it will be one account where in the debit side, as I told you, it will be expenses and in the credit side it is income. Okay, so half will be, first half will be trading account and next half will be profit and loss account. So in trading account, if the credit side is more than debit side, then it is gross profit. So what it is called as? It is gross profit. If the debit side is more than credit side, then it is gross loss. So if the credit side is more than debit side, then it is gross profit. If the debit side is more than credit side, then it is gross loss. So you can clearly understand when I show you the format. Okay, so time being you remember. So this trading profit and loss account is a single account where half will be trading account, that is first half, and the next half will be profit and loss account. So if the credit side is more than debit side, then it is gross profit. If the debit side is more than credit side, then it is gross loss. And profit and loss account will be continuation of this trading account where it starts with gross profit or gross loss. Then all the indirect expenses will be recorded there. Whereas in trading account, all the direct expenses will be recorded. Whereas in profit and loss account, all the indirect expenses will be recorded. And the result will be either net profit or net loss. Here also, if the credit side is more than debit side, then it is net profit. And if the debit side is more than credit side, then it is net loss. So this all you know if you have clearly learnt in your PUC. Okay, so it is a easy problem where you have to prepare this trading profit and loss account. So let us see what is this profit and loss account. Profit and loss account is an account which shows the net result. So in trading account, they are going to show the gross result. Here we are going to show the net result of the business, which is either net profit or net loss. As I have already told you, if the credit side is more than debit side, then it is net profit. If the debit side is more than credit side, then it is net loss. It starts with gross profit or gross loss. So because it is a continuation of trading account, so it starts with gross profit or gross loss. Further, indirect expenses and incomes are taken in this account. After that, all the indirect expenses and indirect income will be taken. Whereas in trading account, all the direct expenses and direct income will be taken. In profit and loss account, all the indirect expenses as well as indirect income will be taken. So this is a format, or we have learnt about trading profit and loss account. Now coming to the balance sheet. So after this, we have to prepare the balance sheet in order to know the financial position of the business. Now let us see what is this balance sheet. Remember, trading profit and loss account is an account, but balance sheet is not an account, it is a statement. So balance sheet is a statement of assets and liabilities. So in balance sheet, we are going to record all the assets and liabilities of a business concern at a given date. So normally, as I told you, at the end of your financial period, you are going to prepare this financial statements. So balance sheet will be prepared at the end of the financial period. So it shows the financial position of the business. So balance sheet, the main intention of preparing the balance sheet is to know the financial position of the business. So hope you are clear, or you have got an idea about what is this financial statements. So what are the financial statements we have to prepare? Trading profit and loss account and balance sheet. The main intention of preparing trading profit and loss account is to know the net profit or net loss of the business, and balance sheet is prepared in order to know the financial position of the business. That is the total of assets and total of liabilities. Now coming to the format of trading account. So let us see what is the format of trading account, and today we shall solve few of the problems relating to only trading account. So I'll solve the problem on trading account individually, profit and loss account individually, and balance sheet individually. Later on we shall go through a problem where all these are included together. Okay. Now this is the format of trading account. So normally we are going to prepare trading account at the end of the financial year. So trading account, write the heading trading account for the year ending. As I told you, you will be having debit as well as credit side. Under debit side, expenses or losses amount, and a credit side, revenue or gain and amount. Now what is the format? So you will start with 2 opening stock. So so your trading account will be started with 2 opening stock. Next your format will be 2 purchase less returns. So returns is nothing but here purchase returns. So 2 opening stock, 2 purchase less returns, write in the outer column. Next you will write all the direct expenses. Okay, so you will write all the direct expenses. So which are the direct expenses? The expenses that takes place in the factory, they are termed as direct expenses or directly involved in the production of a particular product. So these expenses are termed as direct expenses. So which are the direct expenses? Wages, that is the wages which is given to the workers in the factory. Next, carriage inwards, that is while importing the goods, whatever the shipping charges is been charged. So that is carriage inwards. Next, freight, so this is also one of the charge here. To coal, gas, fuel, water, so these are all used in the manufacturing of a particular product. Next, to cleaning charges, to dock dues, to excise duty, to import duty, factory rent. So remember, it is a factory rent, to manufacturing expenses. So these are all direct expenses. So what is the format? 2 opening stock, 2 purchases, less returns, to all direct expenses. Now coming to the credit side, we have only few, that is buy sales less returns, that is sales returns. Then buy closing stock. So buy closing stock will be recorded in the credit side. Next, you will balance both the side, and the balancing figure will be either gross profit or gross loss. That is to profit and loss account, this is gross profit. So if your credit side is more than debit side, then it is gross profit. Suppose if the debit side is more than credit side, then you will write it as by gross loss. By gross loss, and this will be the balancing figure. Gross loss carried down. So this will be the gross loss. So normally it can be either gross profit or gross loss. If the credit side is more than debit side, then it is gross profit. If the debit side is more than credit side, then it is gross loss. So this is the format of trading account. Now we shall go through a problem on trading account, easy problem, so that you can clearly understand while we are solving a problem together on trading, profit and loss account as well as balance sheet. So from the following balances taken from the books of Sharada Limited for the year ending March 31st, 2019, calculate the gross profit. So they have asked us to prepare the trading account and find out what is the gross profit. Now closing stock. So where do we record closing stock? That is by closing stock in the credit side. Net sales. So they have given the sales. So this is also by sales, credit side. Net purchase. So we will record in the debit side 2 purchases. Next we have opening stock. This is also in the debit side 2 opening stock. Then they have given direct expenses. So this is also in the debit side 2 direct expenses. But make sure that you will write in the same order. So how do you write the solution for this? Trading account for the year ending 31st March 2019. So draw the format debit as well as credit side. Under debit side expenses or losses, amount, credit side revenue or gain and amount. Now how do you start? 2 opening stock. So what is the opening stock? That is 15 lakh. Right? 2 opening stock 15 lakh. Next we have purchase, net purchase, 2 purchases. But there is no return. Suppose there is return, then less returns. Then write in the outer column. Here they have just given purchases. So write 2 purchases 15 lakh. Next we have direct expenses in the debit side. 2 direct expenses 80,000. Now coming to the credit side, what are the items we have? By sales, by closing stock. So write those amount. By sales 40 lakh, by closing stock 2,50,000. Now balance both the side. So if you total the credit side, it is 42,50,000. Whereas coming to the debit side, we get a balancing figure of 11,70,000. So how to balance this? 42,50,000 minus 15 lakh minus 15 lakh and minus 80,000. So here what is the total? 15 plus 15, 30,80,000 is a total in the debit side. But in the credit side it is 42,50,000. So 42,50,000 is greater. So write both the side minus 30,80,000. You'll get a balancing figure of 11,70,000. Now what is this? Your credit side is more than debit side. Correct? So it is gross profit. So to profit and loss account, gross profit account, or you can directly write to gross profit carried down. So this is how you are going to prepare your trading account. Now we shall move on to the next problem, that is a problem on trading account. Go through the problem here. From the following balance of Arun Trader, prepare trading account for the year ended 31st March 2016. So here also they have asked us to prepare the trading account. Now go through the particulars. So first we have to identify where we have to record these items. So coming to the first one, cash purchase. So where do we record? That is after opening stock to purchase. So we'll record in the debit side. Next, cash sales, that is in the credit side. Freight charges, so it is a direct expense, we have to record in the debit side. Next, import duty, it is also a direct expense, debit side. Next, stock on 1/4/2015. Now see the date when they have given 31st March 2016. So it means that it is opening stock. So we'll record in the debit side to opening stock. Now coming to here, credit purchase, that is, it is also in the debit side. Next, credit sales, that is by sales we are going to record, that is credit side. Carriage inward, so it is a direct expense, debit side. Stock on 31st March 2016, so it is what? Closing stock. So we'll record in the credit side. Wages, it is a direct expense, debit side. So we have identified where we have to record. So directly we shall go through the solution here. So write the solution. So how to begin? Write the heading. Trading account for the year ended 31st March 2016. So how do we begin our trading account? To opening stock, to purchase, less return, to all direct expenses in the debit side. And coming to the credit side, by sales, less return, by closing stock. And in this problem, they have given credit sales and credit purchase as well as cash sales as well as cash purchase. So you have to take together. Okay, so if it is relating to purchase, you have to take together both credit as well as cash. In the same way, if it is relating to sales, we have to take credit as well as cash sales together. Now we shall begin with opening stock. So what is the opening stock? That is 30,000. So 2 opening stock 30,000. Next we will write 2 purchase, but we have cash as well as credit purchase. So we shall take that. Cash purchase 10,000, credit purchase 2 lakh. So it is 2 lakh 10,000. Next, write all the direct expenses. So which are the direct expenses we have? Yes, freight charges 10,000, import duty 15,000. So freight charges 10,000, import duty 15,000. Next, we have here carriage inwards 2,000, wages 5,000. So carriage inwards 2,000, wages 5,000. Now coming to the credit side, we have to write by sales less returns by closing stock. Now sales. So here they have given cash as well as credit sales. So we have to write together. So we have cash sales 1 lakh, credit sales 2 lakh 20,000. Add both. So cash sales 1 lakh, credit sales 2 lakh 20,000, it is 3 lakh 20,000. Next, we don't have returns, we have closing stock. So what is the closing stock? 25,000. So by closing stock 25,000. Now we have to balance both the side. Balancing figure will be either gross profit or gross loss. Now if you see the credit side, the total is 3,45,000. Whereas in the debit side, you will get a balancing figure of 73,000. So as I told you, how you have to balance? You have to count both the side. Which one is greater? You will write both the side minus the smaller amount. So you will get the balancing figure. That is 3,45,000 minus all these, you will get 73,000. Now since credit side is more than debit side, so what it is? Gross profit. So 2 gross profit carried down. So this would be the balancing figure. So hope it is very easy if you solve individually. Now we shall go through one more problem like that. So from the following balance obtained from the records of Mr. Shan, prepare trading account for the year ended 31st March 2016. Here also we have to prepare trading account for the year ended 31st March 2016. Okay, so opening stock, where do we record? Debit side, 2 opening stock. Next, purchases, that is, how do you write? 2 opening stock, 2 purchases. So here also it is debit side. Sales for the year, so we will record in the credit side as by sales. Carriage inward, so it is a direct expense, debit side. Next, closing stock, so we will record in the credit side. Easy problem. Okay, so we shall directly go through the solution now. So write the heading, trading account for the year ended 31st March 2016. So we'll be having debit as well as credit side. Debit side expenses or losses, amount, credit side income or gain or income or revenue, amount. Now how do you start? 2 opening stock. So what is opening stock? 2 lakh. So 2 opening stock 2 lakh. Next we have purchases. So what is a purchase? 20 lakh. So 2 purchases 20 lakh and direct expenses. So here we have only one direct expense, that is carriage inward 10,000. Now coming to the credit side, by sales by closing stock. So what is the sales here? So sales is 35 lakh. So by sales 35 lakh and by closing stock. So what is the closing stock? 5 lakh. So write by closing stock 5 lakh. So the total is 40 lakh here, but you will get a balancing figure in the debit side, that is 17 lakh 90,000. That is 40 lakh minus 10,000 minus 20 lakh minus 2 lakhs. So you will get a balancing figure of 17 lakh 90,000. So your credit side is more than debit side. So what it is? It is gross profit. Gross profit carried down, and this would be the balancing figure. So hope you have understood how we have to prepare the trading account. Very easy. In the debit side, you will record all the expenses, and credit side all the incomes. Where your debit side starts with 2 opening stock, 2 purchase, less return, to all direct expenses, and credit side by sales, less returns, and by closing stock. So you will balance both the side, and the balancing figure will be gross profit or gross loss. Okay, so in my next session, I am going to discuss problems on profit and loss account as well as balance sheet. As I told you, in first 2 sessions we shall discuss individually. So what is this, or how we have to prepare trading account, how we have to prepare profit and loss account and balance sheet. Then later on we shall combine everything and prepare one whole problem which contains trading, profit and loss account as well as balance sheet together. So my dear students, hope you have understood today's session. See you all in my next session with a new topic. Till then, take care. Thank you.